Good morning, dear participants of the International Financial Congress. On the third day of our Congress, we shall continue talking about the way the economy and the finance changed over the 18 months of the pandemic and what will define the vector of the future development. Some of the trends started growing faster because of the pandemic, like the digital. Others have just manifested themselves, like the remote employment, while the third ones pivoted back. And the most eloquent example here is the inflation growing from chronically low levels in the developed economies. We need to reassess the situation, cast a new look at the habitual phenomena. What out of what we're seeing right now is temporary, and what came to us to stay for a long period of time, or for good. To see the future systemic risks emerging in this world, and of course, the new strategic opportunities. The global economy is recovering. Unprecedented measures by the government and the soft monetary policy enabled us not only to nip the rolling out crisis in the bud, but also to provide for a quick recovery. But on the other hand, a powerful fiscal stimuli and an accommodative monetary policy led to inflation growing. And many central banks currently have to make difficult decisions. Inflation threatens the growing livelihoods of the people now and in the future, but toughening the policy may slow down the recovery of the economy already now. At the same time, the spike of inflation has different causes in different countries. In some, it can be considered a short-lived effect that one could simply wait out, while in other countries, like, for example, in this country, the inflationary expectations have grown, and the lack of a response on the part of the central bank will definitely lead to the inflation spiral gearing up, while the effect of the soft policy upon growth has practically been exhausted. So the concern over the inflation is made stronger by the concern over a much quicker toughening of the global finance. The overly accommodative monetary policy by the leading central banks that held for several years comes to an end. And if this acceleration is not going to be a quick one, but a lengthy one, the central banks will have to react. Toughening such a policy will lead to the capital flowing out of the emerging markets, and the growing volatility will definitely impact the economy. Changes in the labor market additionally whip up the inflation, and that doesn't look like to be a temporary factor. The faster development of the digital services and the remote work and online commerce, it all led to the demand for some of the occupations growing while declining for others. And that is why the unemployment that grew during the crisis may be of a structural nature. The deficit of labor in some sectors may be accompanied by a high level of unemployment in others. And even against the unemployment level being close to the pre-pandemic ones, that may bring about an inflationary pressure. What could this mean for our monetary policy? Firstly, Russia is among the leading countries where the economy is recovering quicker and practically has reached its pre-crisis levels. Similarly, Russia is one of the first countries which started toughening its monetary policy. The economy is nearing its potential, and sustaining the accommodative monetary policy no longer would assist growth, but would rather promote bubbles. The growth of inflation globally, as well as brought about by domestic factors, which sometimes are quite stable, requires on our part to be firm in bringing inflation back to the target. Secondly, in as far as the Russian economy was able to recover quickly, is the contribution from the monetary policy, and it is not as much about and only reducing the key rate in the spring of last year. More importantly, it's the result of the inflationary targeting over the past few years. We've been able to pursue the counter-cyclical monetary policy and during the crisis help the economy rather than fight against the steep inflationary risk as the case had been before, because we were able to maintain inflation close to the target over a long period of time, which creates an additional confidence in the correctness of our pursuit and that the toolkit we have in our policies enables us to achieve the desired outcome in different circumstances. Thirdly, changes in the economy, in the expectations amongst the households and businesses may require all kinds of central banks' policy to be adjusted, including the monetary one. Most of the central banks, and in the first place those who pursue the inflationary targeting policy, because of that, conduct every now and then an in-depth review of their targets and instruments, something that usually is being described as monetary policy review or a review of a monetary lending policy, as literally sounding in the Russian. This year, we also plan to follow this procedure. Targeting inflation for 5 years, and over this period of time, we've held inflation close to the target for quite a while. Amongst the household and the businesses, they have grown in the better awareness of how that works. The inflationary expectations amongst the market professionals are anchored for a long-term outlook, and what's important, it is reflected in the long-term rates. Some of the policy parameters were related to the fact that we've introduced inflation targeting during the period of disinflation, when we ran the policy of disinflation, lowering it down from high levels. For example, we've defined our target as a very much pointed one, so as to anchor to it the inflationary expectations. We refrain from setting a range so that the inflationary expectation wouldn't hold stock still at its upper boundary. The size of this goal corresponds to the market development level, but it has changed somewhat over this period of time. Then the operating procedures that we selected also complied with the market structure, and so one needs to understand whether the structure has changed in such a way that it would require certain changes in our procedures and policies. So these and certain other issues are what we would like to assess as part of our review. We plan to approach it on a comprehensive footing, first to do certain analytical work through our research centers, which should test specific hypotheses. During the second phase, we plan to engage in a consultations with the public, with household, financial companies, independent analysts. Now, about the economic changes in a broader context. The economy has practically gone back to its pre-crisis level, and currently the main issue is what will be the post-pandemic growth like. What will help us to grow more than 1.5% per annum, because that was the way we assessed our potential growth rate before the pandemic. In our mind, the monetary policy and bringing inflation back to the target will correspond to our long-term development goals. Yes, indeed, the monetary policy doesn't affect the economic potential, but it creates the conditions for investments which would improve the labor productivity and shift the resources into the sectors which hold the key to the future. The most important result of the inflation targeting policy is that we've been able to achieve the reduction of the so-called inflationary premium and, respectively, the level of the long-term interest rates, expanding the availability of the long-term funding, because it is specifically the moderate level of long-term rates rather than our key rate as such do play the most important role in the businesses making their investment plans for the future. It is very important not to let the change impulse pass by, to support digitalization and along with it the improvements in labor productivity and reducing the businesses' expenditures. The government launched major infrastructural project which should create new opportunities for businesses so as to truly make the truly effective projects come true. And that is important for the energy transition, which invariably will be taking place, and it will require major investments as well as the development of the new, greener, more expensive technology, and the measures of regulation applied by different countries, including in the area of taxation, will affect the cost of the Russian exports. The global transition towards the green economy may reduce the export potential for some of the Russian operators, but improve the potential for the others. And here, it is not less important not to let the moment pass by when one could redirect the economy as well as redirect the resources of the financial sector. Apart from the challenges to our new future growth, we should be particularly cognizant of the risks to the financial stability which have strengthened during the pandemic. We are aware that many companies and countries have accumulated enormous debts. It was not difficult to service them against the low rates, but the growing rates may change the situation. Principally, some of the countries and the global economy generally may encounter new financial problems and a wave on insolvencies and higher volatility. We are not able to control these processes, but we may minimize the consequences for the Russian economy to reduce its vulnerability in the face of the new possible global cataclysms. And so the first and most important thing here is not to accumulate internal domestic disbalances and prevent bubbles from emerging. In the banking sector, we are particularly attentive of the consumer lending and mortgage. The mortgage growth, we see based on the results of the year, may exceed 20%. The accommodative monetary policy and various exemptions mortgage offering by the Russian government have overheated this market. To maintain high standards of mortgage lending, as of August 1st, we are raising the markups for mortgage loans with the original contribution from 15 to 20%, raising them to the pre-COVID level. So the danger of the consumer lending overheating is quite real. This year, we see that growth may reach 20%, while household incomes are not recovering so quickly. And if one is to avoid taking measures, we may end up being confronted by the social risks and the financial stability risk. So we again introduce macro-prudential measures and bringing back to the pre-pandemic level the markups to the risk ratios. And I would like to say that if growth in this segment doesn't slow down, we will further rise the markups. Another limitation in as far as the retail borrowers are concerned, how one should regulate lending using floating rates, whereas in the corporate lending a floating rate is a normal instrument. For a consumer lending, that could be a risky path. Households, as opposed to businesses, not always may correctly assess their future risks and agree to a floating rate loan that may grow, particularly in the mortgage sector. The biggest lending case where people usually take a loan and not being able to pay back, you may lose your housing. 2 months ago, we published an advisory report about the floating rate. We discussed it with the market players, and so based on the results of these discussions, the following are the conclusions that we came to. Full prohibition of floating rate is not the best decision because it reduces the possibility to further expand the lending activity, particularly against the backdrop of the banks having more of a short-term liabilities and more of a long-term assets. And so floating rates do help to eliminate this this balance, although I would like to particularly mark that the banks, anyway, in the first place, need to grow their long-term funding resources, for example, through bond issuance, but without limiting the floating rate. It should only be made available to well-qualified borrowers, the most affluent citizens who are capable of understanding fully the risks that they face when borrowing in big amounts. And so the lending terms should be offered at a very well understood terms, and so the floating rate should be prohibited here. But in as far as the majority of loans are concerned, particularly the mortgage loans, the floating rate lending should be accessible, but limiting it to the range within which the rate may change or the lending term may change. For example, that may be not more than 1/3 of the rate or not more than 1/4 of the term of the loan. But these are the things that require additional discussion. Households then will be able to count their risks in different scenarios and make a well-thought-out decision. Now, the caps, the limitations, which will define what will be considered a small loan, we think should be set taking into account the regional peculiarities, which also requires additional thinking. Now, from the current risks towards the trends in the financial sector itself. Digitalization of financial sector is a much more powerful trend even than in the economy generally, because the financial sector effectively, since long time ago, has made the new technology work for its future. The most powerful systems, like an ecosystem, is the fruit of a merger between technology and finance. And the power of such ecosystems is such that not only they are able to influence the development of the financial sector and the inherent competition, but the real economy as well, dramatically changing the household behavior, the distribution channels, and the circumstances within which the supplies of non-financial services have to operate. An ecosystem is a great convenience for consumers as well, but also poses new challenges for the regulator. It is important for us not to hold back the ecosystems from their development, but also not to let it do everything at its own volition, because there are potential risks and the ensuing great involvement of the government in this sector. Last week we published the advisory report, the regulation of the ecosystems with the participation of the banks, and we're starting its discussion. Now, the most important thing we believe we should do now is to control the risks of the banks as the centers of the developing ecosystems, because of the growing investment in the non-financial assets, because most probably not all of such investments may succeed. Some of them may devalue, which may create risks for the lenders and depositors. And through such regulation, we plan to cover other non-core assets of the financial institutions. Based on our estimates, the overall amount of such immobilized assets which do not have any recall and are limited in their liquidity already amounts to 2 trillion rubles. At the same time, they are covered by a regulatory capital of the banks only worth 15% margin. But once again, I would like to underscore, we don't want to limit the development of the market and undermine the competitiveness of the Russian ecosystems and decelerate the introduction of innovations. On the contrary, but the ecosystem kind of a business, we believe if the banks are to develop it, they should do it at the expense of their shareholders rather than the depositors and lenders. In other sectors apart from the financial market, conditions should be provided so that the customers could enjoy comprehensive solutions. We've worked for many years to eliminate the regulatory arbitration and introduce the risk-based approach, raising our requirements towards financial stability. And so we believe that currently we can realistically go towards the activity-based regulation. That means that the regulations are not going to be presented to a specific legal entity, but the kind of activities that this legal entity is involved in, what it will all be about. The payment services could be provided by financial and non-financial institutions. We feel that the non-government pension funds and the life assurance companies as an activity can be combined. The insurance brokers, microfinance organizations, non-government pension funds should be given equal opportunities to combine various operations that they do in asset management and in investment advisory activities as well. And so over the next few weeks, we intend to publish an advisory report for public hearing and discussions, which will give more details about these ideas and proposals. Now, in as far as the energy transition trend is concerned, the green economy and the green finance is something that I have already mentioned. That will require the financial sector to change its approaches. And the last trend in the financial market that I'm going to mention today, the one that requires our regulatory response, is changing the consumer behaviors, the consumers of financial services. During the pandemic, households started more actively saving and investing their savings into the market instruments, stocks and bonds rather than deposits, which is good for the development of the national stock market and to provide sufficient finance for the investment projects and to develop the sources of long-term funding. But one should also provide for the security and safety of the people in the stock market so that the risks that they take could be adequate in terms of their knowledge and their needs. Unfortunately, financial players, regrettably, on a regular basis abuse such trust from consumers, and that is why we continuously have to toughen the requirements we place upon the products, upon the marketing practices. The market is upset about our policies, believing that we block, similarly, the introduction of good products and bad products. We're neither happy ourselves because of having to toughen our stance every time, because we simply, slap the tails. Only during the last session of the Russian parliament, 12 acts were brought into effect related to the protection of the rights of the consumers of the financial services. This is abnormal that we currently don't have any other way, but rather increase the controlling authority. And because our hopes for self-regulation are not strong, we believe it is proper to move towards a more systemic work to be done to reduce the risks for households and consumers. As they say, we would like to agree with the marketplace upon the basic principles, and the first of them, managing the product life cycle, the product life cycle governance. This is the topic that we discussed at this Congress yesterday, and we're preparing an advisory report which will be published to later be debated with the financial community. And so the idea of such a product life cycle governance is about, before the company launching a new product or a service into the market, it should define its target audience, the needs of such a target audience, the customer risks, and test a product before it launches it. The second approach is assessing the consumer value of a financial product. In our mind, a good quality financial product is the one which corresponds to a common sense expectations on the part of a consumer. And I do believe that such an approach will be conducive to a healthy competition in the market. Unfortunately, not all the financial products which are represented in the market right now do conform to the consumer value principle. By way of examples, let's look at the recent shareholders insurance. Based on the data for 2020, the level of the correlation between the payment and the premium accrued within certain insurance instruments is critically low. The health and life insurance for mortgage borrowers, 10%. For those who took an auto loan or a consumer loan, not more than 5%. Extremely low is the level of payments that we observe in the coverages offered for the banking card and 4% respectively. We've taken a look at the examples from other countries. The level of payments there is multiply high. And so the question comes, what do we need such insurance coverages for? Why do people have to pay for them? Of course, we understand that the level of payouts is not the only criteria for assessing the consumer value, but nevertheless, this is the indicator of something not being right. So what are we going to do? To begin with, we would like to strengthen the requirements placed upon the information disclosure with respect to the policy coverages. It's about the terms of payment, and as far as the hybrid deposits are concerned, the structure of the projects, the income and yield generation products. In our regulation, we will set the targets. First of all, the direct correlation between the conditions as well as the expectations of the consumers in insurance payments is making sure that the insurance case directly corresponds to the life predicaments that people encounter. Secondly, we're not allowing to have an excessive complexity in documentation work. Thirdly, payment of an insurance coverage must be simple and convenient. We count upon the financial sector itself developing long-term, trust-based relationship with consumers, and in reality will be customer-centric, because the financial market in the first place is based upon trust. And actually we do see the way the trust between the banks and the customers helps both people and economic agents during the pandemic. And in conclusion, I would like to say that the pandemic has demonstrated that the financial sector is a good one, because large-scale restructuring, expanding the lending opportunities, the availability of financial services, amongst others, to the small and medium-sized businesses. So, sustaining the development of the financial institutions and their stability is a serious achievement, and that shows that the future challenges, no matter how difficult they are, we will be able to persevere through. And so I hope that together we'll be able to identify the best way to respond to the challenges that the pandemic and the post-pandemic situation may create for the financial system. The financial industry shall evolve in such a way so as to support the well-being of the people and the growth of the national economy. Thank you very much for your attention.